What's going on, guys? This is Amish APJ. Today we had a red day, Monday, November 17th. Going to be going over a couple trades and what we could have done better. We're going to be looking at, why we took the trades, what we could have done better, and just analyzing those setups individually. So total of 3 trades today. We'll go over those. All right, everybody's in the right channel now. Welcome, guys. Scooter, good to see you, brother. So if you were on stream today, you saw the trades we took, right? We didn't break rules. We followed our system. We didn't take trades that didn't have context. But unfortunately, it just so happened to be a red day. Now, I will admit, I spent a few hours today reviewing the trades I took. I could have done some things better. So we're going to go over those, right? This is a part of trading. We had 2 weeks of absurd greenness, right? 89% win rate across those 18 trades we took over the last 2 weeks. So, a red day is bound to happen, but we still can improve, and that's what we're going to be here for. So I appreciate you guys who are joining. This is where the value comes in, right? Not just looking at the green trades and why they worked, but also looking at the red trades and just seeing, sometimes a red trade will just be red and that's the way the dice roll. But other times there are factors and confluences that we can kind of analyze and adjust, right, to hopefully avoid making the same mistakes. So going to go over that right now. Real quick before we get into today's price action, I want to look at Friday's because it was very similar to what we saw at the open today. Pre-market, we saw a bunch of accumulation here. This is Friday, keep in mind. And then right at the open, we see manipulation. Right down here, we swept Friday's low, manipulated. That was literally low of day, I believe, on Friday, where we had reversed. And this was just 1, 2, 3, 4 minutes into the open, right? All price wanted to do was come down and sweep low of day here. So that's what happened Friday. And then obviously you see here distribution basically all session long to the upside. So AMD, very clear. Unfortunately, as great as that analysis was, we did not have any great entries. Reason being is although we did inverse this lower 1 minute gap, price came up and tapped this fresh 1 minute here. Okay, so this is a reason for price to reject. Anytime we tap a fresh opposing fair value gap, right? Yes, we inverse this lower FVG, but you see we did wick into this upper. That basically negates the trade for me, especially when it's a move like this. This 1 minute candle had already moved, quick math, 75 points, right? So we would be buying the high 75 points above the open. That's just a lot, and that's a reason not to take the trade. So therefore, didn't get that entry. If this 1 minute gap wasn't there, we would have got that entry and we would have been paid and probably done for the day just off of that trade. I say all that to say a very similar situation occurred today at the open. So once again, we were opening up near low of day, right? If I zoom out, this was high of day formed overnight where we swept Friday's high, tapped a bearish daily FVG, and then sold off all London, right? That's what happened overnight. And then same situation, right? Consolidation ahead of the open here. All of this is consolidation, accumulation, whatever you want to call it. Manipulation here. What was unique about today's open is that just the first minute, so 9:30 Eastern, this was basically all the manipulation, right? This singular down close candle here, I'll zoom in so you guys can see it, where my pointer is. That is the 9:30 Eastern open. That basically formed this 15-minute wick here. Sorry, let me scroll forward a bit. Right here on the 15-minute, you see this wick. That corresponds with this 1 minute candle. Okay, so there on the 1 minute, here on the 15. So very similar situation, right? I kind of saw it playing out in real time. But just like Friday where we didn't have a clean entry, same thing occurred today, right? We inverse this lower 1 minute gap, but price taps into this upper. I wouldn't say this is a flaw with the strategy because this more often than not will protect you from bad trades, right? When we have a move like this occur and price taps a conflicting fair value gap, that's a reason not to take the setup, right? That is a reason for the setup to be stopped out. So we're not going to put risk on in a situation like that. So although, price did rally just like it did on Friday, this was not a time to put risk on, right? If you're trading like this, you're using FVGs for your entries, but then you're not respecting the concept of a fair value gap when you're taking a trade like this, where we have an open conflicting gap. So I don't take those setups most of the time. The very rare chance I do take a setup like that, it's if we have, let's say pre-market action like this, we form a big gap like that, come down, inverse here. You know, let's say all of this was pre-market, right? And then this occurs at the open, right, where we manipulate to the downside, sweep below. We get a trade like this. Let's say we inverse a 1 minute gap like this. Let me draw that a little bit better. Let's say we get this 1 minute inversion at the open. Again, this is pre-market. If there was an old FVG, something like this, I sometimes will take that trade. But again, that's sort of 1 in a million. And I won't take a trade like this where it's just, you know, it's a fresh gap, right? We haven't seen price interact with it before. I say all of that to say we didn't get an entry down here. But, you know, I'm not going to go bending my rules and chasing entries because a loss like this is far more likely to send you guys on tilt than a reasonable loss where you follow rules, which unfortunately we did have today. Today's trades were all on the 30-second. We took our first short somewhere up here. Let me pull up a 30-second chart in my journal for today. And we'll break these down one by one, and I'll tell you guys what I came up with, you know, in my time reviewing. So trade number one, we had these relative lows here on the one. Okay, everyone should see that. So we had fresh relative equal lows. We had a fresh 1 minute fair value gap here. And that also corresponded with, let's find it, this 5 minute gap. Where is it? Right here. Okay, so this fresh 1 minute gap, these relative lows correspond with this 5 minute gap here on the bottom left of my screen. This was sort of my bearish draw in my trade thesis, why I thought the market was going to come down. So what did we see? We saw New York highs swept here. Sorry about that. Trading View signing me out for no reason. We saw New York high swept on this candle here, right? A failure to close above. So obviously none of this stuff on the right exists. We're just seeing these candles here. Failure to close above, New York high swept, and then fresh 5 minute, fresh 1 minute, and relative lows as our draw. Great confluences, but unfortunately the entry just did not play out. So let's take a screenshot of that. Here it is. I'm going to put that on my screen now. Again, this is going to be a 30-second chart. That's where the inversion occurred. Here's the trade. Okay, you guys can see my execution arrows. The only flaw I see in this trade is an open 30-second bullish gap, which you see in the bottom of my chart here. Now, I do put more emphasis on the 1 minute, the 5 minute, obviously the 15, than a 30-second conflicting gap. In this trade, I felt like I had enough reason to take it because of that fresh 5 minute draw, that fresh 1 minute draw, a New York high sweep, right? There's a lot going on that supersedes the importance of a conflicting 30-second. Unfortunately, you know, this held. Price did not make a new low, and we bounced. So this wasn't the worst trade in the world. I would rate it as an A setup. I would not rate it as an A+. You know, if I'm being completely honest, although we did have a clear draw, we had New York highs swept, right? Quick up, quick down. I'd love to see that. The only thing that took away from the quality of this trade, in my opinion, was this conflicting 30-second. More often than not, you know, if we have that much context and that much reason to take a trade, an opposing gap on a time frame as low as the 30 is not going to do much, right? You guys can drop down as low as you want in time frames. Even the 15-second, if you started trading the 15-second, you'd see way more conflicting gaps. So it's not necessarily, you know, the most important factor for me. But, you know, if I had to pinpoint a reason, gun to my head, why was this trade stopped out? That's what I would say. Just a conflicting 30-second gap there. So, you know, from now on reversals, I think I need to be a little bit more careful when it comes to these setups, you know, 30-second reversal setups. And, you know, I'm not banking on low of day being hit, but a very clear draw like this, you know, shooting for 15 points, this trade works, I would say, 7.5 times out of 10, right? A 75% win rate on a setup like this. You know, if this 30-second gap wasn't there, I would give it a 90% win rate, right? Because we have so much higher time frame confluence pushing price down. You know, we had just tapped a New York premium. We had tapped a fresh 15-minute gap. A whole lot there going on, pushing it down. It unfortunately just did not play out. You know, today was also a no news Monday, so that could have influenced price a bit. But, you know, after bouncing, let's see here, manipulation down there, you know, we had bounced 230 points in a matter of 10 minutes, right? 230 points in 10 minutes. That's, you know, NQ is really volatile this time of year. We're moving about 400 points a day. That is more than half of our daily ATR, you know, how much a daily candle moves in 10 minutes. A retracement was justifiable. we hadn't tapped a single 1 minute gap here, and these imbalances do seek rebalancing, which you see it did play out. But unfortunately, my shorts today were just a little too early. So on that note, second trade was also a short. So let's get into that. Let me find it here. This trade had no conflicting fair value gaps. It was also an entry on the 30, and we'll pull that up right now. All right, so this was trade number 2 today. Again, 30-second chart. Here is the IFVG, right? So we closed below not only this upper 30-second, but also this lower 30-second gap, right? Very strong close. This is displacement to the downside. I'm not trying to top tick this. We're getting that confirmation. If we look at it on the 1 minute, let's see here. Believe it was right here. Okay, so this was, unfortunately, this was basically high of the session, of the AM session. We got our short entry, right? The short entry was right down here. This is where we sold short, right? Today was pretty volatile, so my stop was mean threshold of this 1 minute order block. I just couldn't afford, a 35-point stop at the swing high. Even if I did have that swing high stop, it would have been stopped out. This is just one of those situations in which the market wants to sweep one more time. And you can never really predict that, right? But as far as what we did right here, we waited for confirmation, right? That 30-second chart, if I can find it, we'll just put it back up here. We had clear displacement here. If we compare that, right? 2 huge bearish 30-second candles, 2 inversions given. And ultimately, it was a good short. We had swept these highs here on the 15. If you look at the top left of my screen, these highs were swept. Okay, 15-minute also tapped into a fresh bearish FVG right here. So there's our higher time frame narrative, right? We were in a daily premium as well as obviously a New York session premium. And we got that 30-second inversion, just did not deliver. So this trade, the one factor, again, if someone had a gun to my head and, taking full accountability here, if I had one factor that would dissuade me from taking this, I'll let you guys look at the chart real quick. It's very hard to spot. Very hard to spot. But look at these candles here. See if you notice anything. Right, some of you members who've been with me for a while, you'll see it. It was this 1 minute volume imbalance. Hard to see, and out of all the PD arrays, out of fair value gaps, out of order blocks, breaker blocks, rejection blocks, wicks, yeah, Johan, you got it. What I put the least amount of importance on is volume imbalances. However, again, if I had a gun to my head, why did this setup not work? We did tap this literally 1 or 2 tick volume imbalance here on the 1. Okay. So essentially what that was is, this 1 minute candle never left a wick. It had a small gap up in price. Our 30-second short entry was around here. We tapped it, and we just rejected, and that sent price. So our entry was here. My stop was here. It just sent price a little higher. We swept New York high one more time, and then, that was literally AM session high up there. So as far as entry relative to higher time frames, it was great. It was an A+ location for entry, right? It's not like we were taking shorts down here and getting stopped and wondering why. No, I'm letting price go into a premium. I'm seeing these higher time frame bearish FVGs. I'm seeing them get tapped and provide a reaction. It's just one of those situations in which, the market wanted to move up one more time. But again, if I had a gun to my head, why did it get stopped out? Like Johan correctly stated, it was this volume imbalance there. For the last 2 weeks, getting that 89% win rate, that comes from taking A+ setups. And, I'm a human too, and I want to take trades. So, maybe I just need to put a bit more emphasis on a volume imbalance like that, and maybe we get a week with no losses. That might happen if we avoid trades like this, but that would also include the risk of not having a trade that AM session, right? If we're being this nitpicky. So it's just, pick your poison. This was a good setup here. You see, bias was right, context was right. Price just wanted to literally sweep New York high one more time by, let's see, 3 ticks. 3 ticks are about a point right there of a sweep. So that was trade number 2, which was stopped. Finally, last trade of the day was a long. So I wasn't forcing a bias. I didn't take any shorts over here. I waited for real context, right? Relative lows, New York high swept, 15-minute FVG delivery. But our last trade here was a long today. This was actually an A+ setup. If I'm being completely honest, this was an A+ setup. My flaw here, you could say I was a little bit affected by the 2 losses, and I used maybe more, or rather less discretion than I should have as far as the entry goes. I bought the close of this 30-second, which was, let's see here, let me find exactly where this was. We had swept lows. It was right here. Okay, right here on the one. This is what was going on. So we had come down. I believe we had tapped a discount of our New York session range. So New York low, New York high here. Yep, we had tapped a discount. This is where the entry was. Okay. So confluence is there. We were also in a daily discount, right? We were down here. This was high of day, low of day. Obviously, fresh 5-minute fair value gaps were tapped, so we were getting that delivery from those imbalances. And then you see here a very obvious liquidity sweep. Okay. So a very pronounced low in the market. It's a discounted low. So discounted sell side liquidity being swept. Didn't see a close below that. So our delivery arrays were there. 5-minute fair value gap, daily discount, New York discount, and internal sell side sweep. All of that checked off, right? So, okay, let's look for a setup now. We didn't have any bearish 1-minute gaps here, but what we did have, which I know some of you guys took this trade with me, was a 30-second. Okay, so all trades today on the 30. This was the trade. So you guys should see here, one fair value gap here, another one down there. We closed above both. So it wasn't an issue of a conflicting fair value gap. A+ setup. Again, the issue here was I bought a little bit too high. I didn't wait for retracement. I believe the reason for that was, I was just hungry for a win. Fell to my emotions in the sense that, I was willing to buy at the close rather than a retracement because I didn't want to miss out on a winner. And that costed me. I turned what should have been a winner into a loser. My stop was within this last 30-second order block. I was willing to let price tap this fresh 30-second fair value gap, retrace into a discount of this little bounce here, and finally tap that order block, but I didn't want to see it go lower than that because my entry was high. Okay, so my entry was right here. It was the close of this 30. I should have waited for a retracement, right? Closing above 2 bearish 30-second gaps, I really, any other day, I think if I was fresh, as in had not taken any loss prior, I would have waited, right? Because ultimately, if I'm going to risk capital, I want to be getting the entry I want, right? I'm either getting the entry I want or I'm not getting a trade. And that's a theme we've seen for the last few months on stream. I'll miss setup sometimes if I don't get the retracement entry I want. That's what should have happened here. I should have put my limit entry in the market to buy rather than buying that close. But unfortunately, I did buy that close. I lost about 20 points on this trade with my stop. Had I bought a better retracement, let's say I got an entry down here. Don't look at this price scale on the right. This is on the 1 minute, so we don't have a scale on this screenshot. But if I'd bought closer to this lower 30-second gap that was inversed, I could have afforded a stop at the low of this 30-second displacement candle. That's where it should have been. Okay, so entry something like this rather than up here, and stop at the low of this 30-second candle rather than this order block. That is how the trade should have looked. And again, I would have still took profit at this high, which I was targeting. But, it was a stop out. Johan, I know you won on this trade, so props to you, man. Great stop placement. I love to see that, right? When you guys know where stop placement is, sometimes I make mistakes, and I was stopped out. I took an L. Ming, I'm glad to hear that. So, yeah, you guys are killing it. You've put in the time to learn the strategy. I just made a mistake here. I turned a winner into a loser, right? And that's something I do preach for is proper stop placement will dictate, if you're taking trades and they should have been winners, if they're turning into losers, you have bad stop placement. In this case, I 100% admit poor stop placement on my end. So that was my day, right? Not a euphoric winning day, not one of my big $8, $10, $15,000 days. It was a really nice red day, right? lost about $6,000 on my accounts. That's okay. More than, I'll make that back in a day. I'm not worried about that. But it does sting a little bit when I know that it was human error that caused it, in this trade at least, right? The other trades I'm not so upset about, especially not trade number 2. But this trade, it was 100% my fault. It could have been winner, it should have been winner, but it was a loss. And it is what it is, right? This is why we review, and this is the benefit of this strategy. I know tomorrow we'll have multiple setups come up. I know I'll have an opportunity to make back my losses, and I know that it's just one day. It's a drop in the bucket. If you guys have any questions, let me know. Just wanted to do this real quick, right? AJ Investment asks, do you ever trade Asia or strictly New York? I only trade New York session. My strategy, if I had to define it in one sentence, is higher time frame analysis aligned with lower time frame precision to trade at optimal time windows. That's it, right? That's why I trade the open. I don't trade London. I don't trade Asia. I just trade New York session open because of those manipulation moves, because that's when distribution occurs. Institutions are rushing into the market. That's the most volatile time of the day. So I don't trade Asia. No, I don't trade gold. I don't trade ES. I strictly trade NQ futures at the open. Trading, especially, the way we trade, it's such a democratized industry now. Anyone can get into it. You can trade all day if you want to, right? With futures, you can trade 23 hours a day, literally. You guys have to think about it. If most people lose, right? 98% of traders, you put them into an account for a year, they're going to lose money. If most people are losing, you need to do the opposite of what they're doing. Most people are over trading. They're trading for too long. They're trading too fluidly, right? As in, I trade this asset sometimes, I'll trade this asset. No, you need structure, you need optimization, and you need a defined process. So, if someone asks you what's your strategy, you need to outline what asset you trade, when you trade, how you trade, what your stops are based on, all of that stuff. Nothing should be left up to chance or discretion. Sometimes I feel like this or I feel like that. It needs to be outlined. Yeah, less is absolutely more. These prop firms, the way they make, Apex makes like $20 million a month after paying out another $20 million. So the ratio of unprofitable traders to profitable traders affords Apex as a company something like $20 million a month, and that was last year. I'm sure this year they're doing more. Top Step, I'm sure it's a similar figure. The way they make money is people just trading with too much freedom. There is such thing as too much freedom, because you have to remember, as traders, as individual retail traders, we have to encompass the role of an analyst, of a risk manager, of a director, of a trader, right, of a money manager. All of these roles are put on your shoulders because we want to be individual traders, right? It pays off. There's tons of guys in our group doing 6, 10, 20 grand a month trading. But the key to that is understanding that you do have to fulfill all of those roles, and you have to be your own boss. You have to critique yourself. Don't be too hard on yourself. It's a hard business as is. But still, you need to manage your risk. You need to tell yourself, okay, if I draw down this much, I'm done for the day. And I have to do that. You guys will see me on my infrequent losing days. When I do have them, I walk away. That's that. It stings. I wish I could have traded all day and tried to crawl out of that hole, but that is not what a risk manager would advise his traders to do on a real New York trading floor, right? You hit your loss, you have to be done. I'm not trying to make $1 million today. I've been trading 4 years. That's over 1,000 trading days in the market. One day is not going to make or break my career. Johanna asks, if we have a 1 minute gap in the 30-second inverses, will you take that? Again, that is even more rare, Johan, for me to do that. If the 30-second gives an entry, but there's a conflicting gap on the one, that's even more rare for me to take a trade like that. I really need as little friction as possible. What you'll see more often, like you did in trade 1 today, was 1 minute gives a clean entry. There's nothing in the way there, but the 30-second did have a conflicting gap. In my view, there's more confluence to take it than not, but yeah, I appreciate that, Scooter. A lot of, I spent 2 years Discord hopping, strategy hopping. I've seen it all. A lot of quote unquote mentors, they'll blow up intentionally on stream, and they know that their members are following them. But they keep everyone's hope alive with a few winning days or big trades and a lot of gambling and too much excitement in their trading, too much volatility in their emotion. And that keeps their traders unprofitable, right? And it's ridiculous. Real trading is structured, it's organized, and it's professional. This is a business. It's not a casino. AJ Investment says his biggest struggle sometimes when trading prop firms is the psychology of chasing payouts. Right. Recently switched to trading live capital. Blah blah blah. Okay. Yeah. So prop firms, they do design their rules such that it gives them an edge. Right. They're going to make you trade a certain number of days. They're going to make you hit a certain profit target without losing so much. They're going to trail your drawdown. All of that is to keep them in business, right? To keep them making money. So when you do move to live capital, you have the opportunity to bypass all of that at the risk of losing, as the name implies, real capital. If I blow an account, I've lost 100, 200 bucks. That's my investment into the account. After evals, after PA fees, maybe, I spent a week or two on that account, but my financial loss is $100, $200. On let's say I blow a 50K account, whatever the case is, right? My opportunity is a $2,000 payout over and over and over again. So just with one payout, I can 10x my ROI, my return on investment. That's very hard to do with real capital, because let's say you invest, 5, 10 grand to open a live AMP account or TradeStation, whatever it is. That's 10 grand that, again, you're your own boss. You could potentially blow literally all of that 10 grand. No one is going to tell you, hey, walk away, or you've hit your max loss, or you're trailing drawdown. You can trade till that 10 grand withers away and is $0. That's the risk. The benefit, of course, is, you pull out money. You make $500 today. You can have that in your bank account tonight. You can go to dinner. You can book a flight, all that. And tomorrow do the same thing over and over. But, I've been doing prop firms now for 2 years full time, and the business has become more and more attractive. Right. So what's blown up this year has been TPT because of their daily live payouts. Well, not live, daily payouts, right? You can have a live account, you can have a non-live account, but you can get daily payouts there. So that is as close to a live account as we've ever seen before. And with them around, there's really no reason, in my view, to risk your own personal capital, right? I trade for income. With that income, I buy investments. Okay, I don't want to be using, money I've made elsewhere or in trading, whatever the case is, and go back into the market with that. I want to bank it and be done with it, right? This is the beauty of prop firms. Now, if prop firms went away, then there's a reason to trade cash, but that's my long-winded answer to your question. Good for you. Hey, if you have the discipline to trade a cash account, I see the upside. I see why you would. But in my view, the risk outweighs it. Yep, no worries. All right. Any other questions? Let me know, guys. Just wanted to do this for you all. I'm glad you guys joined. This is valuable. The live streams are fun, and yeah, we make money, but this is where the value is. So I'm glad you guys are putting in the time investment.